Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.
Good morning. It's Tuesday, February 24th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So episode number 604. So let's get you set up here for the trading day ahead. We're seeing the base metals, everything across the board, platinum, palladium, copper, silver, all edging higher here. Gold taking a bit of a breather, but it's been up for about 4 straight sessions in a row. You've got base metals rallying here as China's markets reopen after that Lunar New Year break. The gains in the metals are really mirrored by some positive trend in the mainland equities. We're seeing the CSI 300 index also rising as well, and we're seeing that a lot of those traders are welcoming those lower tariffs here. More Chinese imports for copper and some of these different base metals will occur as they get some clarification on these lower tariffs. Now, traders are going to focus on President Donald Trump's State of the Union address. A lot of people, a lot of the traders in the evening are going to be trading around some of the headlines. They'll start focusing things on like oil, on tariffs, and you might get a little bit of volatility in some of those markets here as we have some uncertainty over his tariff policy and the tensions with Iran. We are going to get some data coming out today with ADP and consumer confidence. So look at the gold market overnight, hitting a high of 52.69, the low 51.64. So quite a wide range here in the overnight session, about $105. If you look at the average true range, it has been coming down a bit over the last 10 days, down to about 183. But gold volatility is edging higher up to 38. That next level of volatility is that 40 level. If you look at on that GVZ and you see it up over 40, you're probably going to see a lot wider ranges in these markets and the possibility for some big moves. So you look at March silver highs overnight, 88.73, lows are 84.69, almost mirroring yesterday's lows. The average true range continues to come down to about $8.18, while silver volatility remains extremely elevated at 86.45. Now, I get a lot of questions about the ETF flows because when the ETFs, they are buying gold, they are buying palladium, they're selling silver and selling platinum. So if you look at gold first, you get those ETF flows edging about 0.2%. That's on the previous trading session, adding about 220,000 troy ounces of gold, and it's the biggest one-day increase since January 23rd. You look at total gold held by ETFs, up 1.4% this year to 100.4 million ounces. Gold is up 21% this year and rose by 2.3% in the previous trading session. Over the last 4 trading sessions, it's up about 7%. Now, where the questions come into play here is the silver ETF flows, because they did decline about 0.3%. Year to date, they're down about 5.6%. If you're a financial advisor or a wealth advisor, or you have a fiduciary responsibility where you have specific guardrails in place for different position sizing, you get involved with a stock, something like NVIDIA, early on, and that position for your clients grows to a certain level, you have the obligation to trim some of that down, to take down some of that volatility and redeploy that capital elsewhere. So when you get silver from a couple things, you'll get it exploding higher, and the position size gets too big because of the volatility, where it turns into a 10, 20, 30% position within an account. You want to pare some of that back and then redeploy that capital to diversification in other metals, or get defensive, or bring some cash in, start looking at other alternatives like the crude oil market, which has had an incredible year so far, being one of the worst performers last year. That's where we see a lot of trimming take place here in some of the cryptocurrencies, where traders saw that break trend and then they exited that market altogether, and they looked to redeploy in other markets outside and other FX currencies. So it's really about position management is what takes place here, because of the fact that you don't want to see that be such a sizable position, because you could recall, and I could trim a lot of the self-directed clients, some of the losses taking place from those two $10 sell-offs that we had in the silver market, and that one $30 sell-off where the position just became too big at that particular moment. And you really wanted to watch that volatility, which was picking up quite a bit. And the average range at that point was like $12, $13. So just too volatile, too big of a position. Imagine being on a roller coaster with no harness whatsoever or no seatbelt. So you look at those silver silver ETF flows, they cut 2.3 million ounces here, 7th straight day of declines. Gold silver ratio sitting at 59-1. It's not that they're completely out of the market, they're just trimming it as it goes up. So you look at stock futures, they are edging higher here after yesterday's big sell-off. Now on the earnings front, out of the 433 S&P 500 companies that have reported so far, 74% have managed to beat those analyst expectations, 21% have missed. If you look at the Russell 2000 and some of the small caps, it's about double the performance as far as those earnings that are being reported in that earnings growth cycle, pushing on up twice that of the S&P 500. You look at the economic data, well, that consumer confidence, that final reading on December wholesale inventories, and then you're going to get a barrage of Fed speakers. You got Goolsbee, Collins, Bostic, Waller, Cook, and Barkin. So imagine you're going to see a lot of headlines and things popping up that's going to be talking about that. Is it going to move the needle on any of these markets? We'd have to see which ones are voting members and if that could do anything. And you look at the CME's Fed Watch tool, the March 18th meeting, no real change, 4.1% likelihood that the Fed will cut rates. You go to April, it's still 16%. June's like 50-50. And now September 16th, that's when it's fully priced in. You look at the dollar index, it's pushing a bit higher here, and it's climbing on a trade-weighted basis here as the yen dropped about 1%. So you look at the Japanese yen on the futures contract, down about 0.75%. That's the biggest sell-off across the board in there. You got the Swiss franc pushing a bit higher, New Zealand pushing a bit higher, the dollar index up about 16 basis points. And it's really, the Japanese prime minister had came out and voiced some apprehension about the Bank of Japan continuing to hike rates. So you saw Japanese stocks and a lot of the MSCI, the Asia Pacific Index, that edged higher here, reversing its earlier decline. The chip makers like TSMC, Samsung, SK Hynix, those were the biggest boosts to the benchmark. So you also saw Taiwan and South Korea jump about 2%. European stocks, they slipped a bit as Trump's new 10% global tariff came into play. You look at the euro currency, just ever so slightly lower. WTI crude oil futures remaining elevated at 66 bucks. You get the 10-year treasury yields down at 4.03%. So that 10-year futures up over 113. And then you look at the way that the dealers are positioned with the S&P Gamma exposure, it's negative. Your key level of support that I'll be watching is going to be about that 6850. Then below that's going to be 6800. You go to the upside, there's a lot of different resistance points from 6930, 6980, 7000. So just a lot of different ranges right there. If you guys got any questions, futures option trading, reach out to us here. A lot of my team members, they will be traveling to the Commodity Classic down in San Antonio. I'm the only guy who got left behind on this one, so somebody's got to man the ship over here. So if you guys got any questions, shoot an email, info@bluelionfutures.com. And remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.
Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.